Good morning, everybody, and welcome once again to our Climate Governance webinar series. This is the third in the series, and it has really been highly informative so far. We want to thank the other partners who presented in the previous two webinars, and that's Caribbean Climate Smart Accelerator, CDEMA, the Caribbean Disaster and Emergency Management Agency, along with 5 Cs. And I see Gail here from CDEMA with us. Welcome all. And so for the third in our 4-part webinar series, today we have another wonderful partner, CCRIF SPC, and they're going to be delving into the topic of climate governance and disaster risk financing. And so it is my delight to welcome our 2 presenters from CCRIF SPC. They are Emmanuel and Gina Sanguinetti-Phillips. I think between the 2 of them, and I'll invite them to start sharing their screen, but between them both, I think you're talking about minimum, but I think it's more than that, 40 years of really fantastic in-depth experience in the area of not only disaster management and disaster risk management, but development planning, work in the area of public policy, climate change adaptation, project management, etc., etc., etc. And I've been honored to have collaborated with them. When I said I, not me, well, yes, me personally, but also CARICAD. They have had inputs in previous webinars, inputs in our leadership development programming as well, building capacity around disaster risk financing, as well as whole of government approaches to risk assessment. And so I hand over to their capable hands now. And while they present, please do let us be engaging in the discussion through using the chat feature. Pose your comments, your questions there, and we will certainly be taking all of those questions. So over to the CCRIF SPC team now.
Hello, good morning, everyone. This is Emmanuel with from CCRIF SPC, and this morning, between myself and my colleague Gina, we will be leading the session on understanding disaster risk financing, the case of CCRIF SPC. So without much further ado, I think I will get straight into the presentation. So as we go into the presentation this morning, there are a number of topics we'll actually discuss. We would look at, for example, the hazard landscape that, the hazard landscape that we exist in the Caribbean. But we will also go into this whole difference between financing disaster risk management or risk reduction and financing disasters before they happen, for example. So are they similar? Are they different? We will get a little bit into the tools of disaster risk financing. What are some of those tools? And then we will drill down specifically into CRIF, what CRIF is, what parametric insurance is, how parametric insurance works. As the video said earlier, we're really looking at financial protection strategies. And there are financial protection strategies being adopted across the world. In fact, in terms of a risk pool or a pool of countries that benefit from a particular financial protection strategy, CRIF was, it was the first, and it remains the most successful disaster risk pool in the world today. So let us begin. When we think of the Caribbean, and I know we have persons outside the Caribbean on the webinar as well, but when we think about the Caribbean, what is the sort of disaster landscape that we're looking at? What sorts of hazards are we confronting or can we see every day? In fact, one could argue that we live in this multi-hazard, or we exist in this multi-hazard environment. I think not too long ago, we had COVID-19, right? And we had COVID-19, but at the same time, let's say in 2020 and 2021, in the heights of COVID-19, we also had very active hurricane seasons. So we had countries battling with COVID-19 on one hand, and at the same time, having to deal with tropical cyclones as they were happening. So in the Caribbean, we say we exist in this multi-hazard environment. And if we look at this table that is in front of you, we actually see that there are several hazards that we're exposed to on a day-to-day basis. We're vulnerable to storms, tropical cyclones. On the natural hazard side, I mean, at any point in time, we could be impacted by environmental hazards such as, land degradation, landslides, sargassum, coral reef degradation. We have several hydrometeorological hazards that we're exposed to. For example, tropical storms, rainfall, lightning, floods, drought, sea level rise, several geohazards, earthquakes, mud volcanoes, tsunamis, submarine volcanic eruptions. So these are all natural hazards, and different countries will have different hazards that they may be exposed to, because not every single country may have a mud volcano. But we also have man-made hazards. For example, we have hazards such as oil spills. We have chemical hazards. We have technological hazards. We have societal hazards. And under societal hazards now, we could actually, in addition to terrorism or cyber crimes or cybersecurity risk, we could also put things like crime and violence. But we also have biological hazards that we're exposed to. We're exposed to several zoonotic diseases. And many times our countries, we do not have the capacity, for example, in most of our islands, we do not have the capacity to necessarily manage several of the biological health-related hazards that we're exposed to, especially those that link the environment with human health issues. So in the Caribbean, for example, we don't have, in the case of COVID, we didn't even have, like, for example, the proper lab to actually test for and do the analysis around COVID as recommended by the World Health Organization. There was no island that had a BSL-3 lab. We all were using BSL-2 labs. We don't integrate some of our biological threats. So we're not integrating effectively zoonotic diseases with human health. So diseases coming from animals, how do we integrate that into one health surveillance system? So there are several issues related to biological hazards that we are exposed to, some of which we're not even, we know there exists on the health side, but the wider society may not necessarily know. So if we were to think, and if we were to utilize the chat, if we were to look at the hazards affecting our own individual countries, the countries that we live in, can we highlight, for example, the top 2 hazards that may be of most significant if they become disasters? And I'll give you like a second to do, like 10 seconds to do that in the chat. Anybody responding?
Can you just repeat the question for us?
If we were to look at our individual countries, right? And we look at this hazard landscape that is in front of us on the screen, which 2 hazards would we say are the ones that we're most concerned about? If they turn into disasters, they would have significant economic, social impacts. Any 2 on the screen. Not necessarily the major one, like the natural hazard man-made, but within those categories, which are the 2 that are of most concern to you? So I'm seeing some stuff in the chat now. Let me get to the top. Right, Misa is saying the One Health approach framework is being used, yes, in the case of biological hazards, but my point was that we're not necessarily there yet. So we're advocating for this One Health approach, we're adopting it, but at the same time, we don't have all the infrastructure in place at this point. So that was why I used the example of the BSL-3 labs. Someone said flooding, Jermaine Jean-Pierre. Isaac, hurricane and flooding. Jermaine again, hurricanes, cyclones, we're seeing cyclones, storm and flooding, hurricanes and drought, flooding and drought, tropical storms, hurricanes, flooding, rainfall, including severe rainfall and oil spills. So this is an example. We have two examples outside of the natural hazards. We had the example of health and we have oil spills here. Maria is saying biological, recognizing the importance of biological hazards. And then we have meteorological and hydrological. And many of us are saying meteorological and hydrological hazards. But one of the things that we want you to do is to sort of, and this is the next area that we're going into, we're going to share with you a sort of a spoken word on how all of the hazards that we're exposed to are really interrelated. This poet, this young poet, she's from Barbados. She is a world-renowned poet, and we have been using her quite extensively at CRIF. We have been contracting her to do work for us to sort of get the message across in different formats. So we can have these webinars, but we can also use things such as the spoken word. So we have been adopting a lot of communication tools to share different messages. So at this point, we're going to listen to Cindy Celeste as she describes for us this multi-hazard risk environment. This particular piece was produced for a regional conference that we had on integrated risk management. So I'll ask that that video be shared now. And of course, listen to it and share with us any thoughts that you have after you have heard it.
Okay, thanks, Liz. So guys, I'm going to start it, but just give me a second. I'm going to have to switch my screen also.
Hi there. You probably already know me. I mean, I have been told I have a familiar face, but just in case you've seen me around and can't place it, or passed me in the street and can't trace it, my name is Risk. No, there's no need for you to tell me yours. I have already interacted with most of you before, so believe me when I say I'm quite sure the pleasure is all mine. But if you still can't find our interactions in your mind, you're probably wondering what corner I've come out of after all this time. And I'm inclined to remind you that if I'm even slightly recognizable to you right now, it's because you've already met me someplace, sometime, and somehow. Allow me to elucidate. Let me do more to demystify the signs signifying my existence, paint a picture illustrating why I already know everything about you. But you've hardly realized I have always been right in front of your eyes. You've developed this instinct to think you can't link the risk you see in one space to the risk you've already seen somewhere else, because it isn't possible for you to reconcile that one risk could worm its way into so many different realms, and your brain becomes compelled to think risk can't be omniscient. Each one must be someone else, or else. It doesn't make any sense. Yeah, that's my talent. to camouflage and chameleon to each unique situation, to hide many personalities within a single identity, and when the time comes, simply don the one I deem contextually relevant. So even those who are aware of my presence only know me superficially, can only see what is immediately obvious about me, what is painfully apparent. I could be doing it right now and most people wouldn't even be able to tell the difference. I don't mean to be a brag, and I'm not often one to flex, but to be honest, y'all make it so easy, I would bet that I could tell you all the roles I'm playing next and still get away with it. For example, I'm the one who makes it possible for water to stagnate in steady pools to create perfect breeding grounds for mosquito larvae. Generations of pests who carry a buffet of diseases in their veins and become catalysts for high infection rates of chikungunya, Zika virus, and various intensities of dengue. I am the anxiety that bids you to say your prayers when a new weather system forms and they give it a human name, so you beg that the next storm season hurries by on its way without harm or incident because you're afraid there's no telling how well your current infrastructure can take a hit from a raging hurricane. I am the lack of warning that precedes every single earthquake. The balance in imbalance. Hiding chaos in poor drainage and water catchment systems to make them proponents for flooding and water scarcity in near equal proportions. I am the under-exploration of economic diversification, limiting opportunities to drive away coming generations to leave in search of better options to make their living. A brain drain causing droughts in social care systems by creating a dangerous reliance on finite reservoirs of reserves already running perilously low. I am trolling around outdated digital frameworks, chomping at the bit to rip through bytes of sensitive information and destabilize nations section by section. I am the mischief that incites faceless avatars to cyberbully and take advantage of your children. I am tucked under complicated jargon, written on food nutrition labels, able to craftily cloak the long-term impacts of ingesting all your favorite snacks so I can lull you into the trap of lifestyle disease. I can do all of this and more with relative ease, and the reason is that you have trained yourselves to believe that each and every one of these is discrete. And in actuality, they're all connected. And it seems your conversations have all historically reflected a tendency to treat the symptoms in the areas affected instead of the entire disease, just creating a short-term ease while leaving me free to wreak havoc on the rest of the societal body. Can't you see my capacity to create a slippery slope? That the scope of my ability affords me the opportunity to make a single danger into many simultaneously, so that a cybersecurity snafu could just as conceivably be detrimental to health and the environment and the economy. You still don't believe me? Imagine what happens to productivity in any industry when the computer systems that guide it cease to function properly. How, if there's no work being done, the economy grinds to a halt, a deceptively simple technological assault with devastating effects. Imagine how a financial institution going under hinders development, or how a natural disaster can make a country more food import dependent when farmers' fields are flooded and local food security is rendered next to non-existent, even if before you had an excuse to feign ignorance. It'd be shocking if the emergence of a global pandemic hasn't been able to make someone like me more evident. So many have their hearts set upon a world without borders and yet forget to account for how technological advancement has played a part in connecting all sorts of different systems, and systems without borders need that same kind of action. I've done my research, mostly so I can adapt my tactics to the ever-changing landscape and create a strategy where my impact can inflict the most possible damage. Keep you thinking each effect is separate and distinct, so you can't anticipate the extent of the carnage. So you'll get caught up in a loop of being reactive. Does it even cross your mind that every faction should be working together? How different it could look if the whole region was in collaboration. Shift the emphasis from working on the problems in isolation to bringing together the governments and policymakers and organizations to collectively push the conversation in a more fruitful direction. Each plan might look a little different for everyone, but either way, coordination is the root of tackling this problem, beyond identification of isolated issues and towards how to prioritize, anticipate, and adapt to each sovereign situation. Until then, this risk will keep running amok. Though, who knows? Maybe this time I've revealed a bit too much.
Any quick thoughts? Maria, absolutely brilliant. Anything else? Anything that came out at you about this whole hazard landscape that we are in? Yes, you can have a link. It's actually on the CRIF YouTube channels. I would ask Gina if she can to drop it in the chat, of course. That's fine. Okay, it pushed you to really look at the holistic picture of risk. And this is what we want to share, that there are several risks that we are exposed to. And we really need to look at how we manage all of these types of risks that we're exposed to. But this is not necessarily the focus of the webinar today, because what we're looking at is we're going to focus on one set of those risks, which are the natural hazards that we're exposed to, and this whole notion of financing these natural hazards. So we're going to go right back now into the impacts of natural hazards and how natural hazards that we are exposed to, they continue to cause significant impacts on the economies of the Caribbean, peoples of the Caribbean. We also see, for example, the significant impacts on vulnerable groups in the Caribbean. So when we talk about natural disasters, some of the impacts we're looking at, for example, when natural disasters do happen, they do result in things like higher fiscal deficits. We have negative impacts on several of our industries. We have increases in poverty levels in several of our countries. We do have people living below the poverty line. A natural disaster hits, and we have people who are immediately above the line, falling below that poverty line as well. We have, following a natural disaster, one of the things that we need most beyond the immediate help that we could get, with water, bottled water, with food and canned food and so on, is the need for quick liquidity to begin recovery efforts. So we see across the Caribbean as well, I mean, the stories are there, how several storms impacted several countries throughout the Caribbean. If we think about Hurricane Ivan, which is where CRIF started, in 2004, we had the impact of Hurricane Ivan was about 200% of Grenada's 2003 GDP. We think about a country like Dominica, and I know we have persons from Dominica here. In 2015, Dominica was significantly impacted by Tropical Storm Erica. Fast forward 2 years later to 2017, they were significantly impacted by Hurricane Maria. And look at the impacts on their GDP as a result of these events. So what we're seeing is the impact, these hazards having significant impact on economies. And once they're having an impact on economies, we're looking at the impacts on people, vulnerable groups, etc. So if we zero in on Hurricane Maria as an example, that event in 2017, we had estimated damage, for example, totaling about 931 million and losses another 380 million US dollars, resulting in about 225% of their 2016 GDP. But if we look at the impact on the population, 93% of the population was impacted, including people losing their lives as well as persons who went missing. The damage to the housing stock was significant across Dominica, with about 15% of their housing stock totally destroyed, 75% partially damaged, damage to critical infrastructure from roads to bridges, water systems, their electricity. So a lot of their lifelines went down, electricity, telecoms, impact on agriculture and the tourism sector. And of course, we also had impacts on ecosystems such as wetlands, etc. So as I said before, one of the things that we need after disaster is quick liquidity, all right? Quick liquidity. So we have if we look at this graph in front of us, we have a natural disaster, we have a catastrophe event, and immediately after that, like within the first few hours, first few days, we have some emergency response, whether it's tents, whether it's food, medication, short-term emergency assistance, which mainly comes in the form of goods and services. But there is a period that we refer to as the liquidity gap, which is little revenue to fund government services. And it's really that space between short-term emergency and long-term reconstruction and redevelopment. In fact, when we think about CRIF, oftentimes people may confuse what we do at CRIF and seem to think that we're also responsible for paying for all the losses on the ground. Our focus is to provide quick liquidity once a natural disaster happens in country and a country's insurance policy with CRIF is triggered. And you'll learn a little bit more about that through the course of this morning. Following Hurricane Ivan, for example, prior to Hurricane Ivan, and even today, when countries are impacted by natural disasters, what we find is that our sister countries go in and help to support those countries. In the case of Hurricane Ivan, several countries were impacted simultaneously. So what happened was that the Caribbean heads of government came together and said, is there a way? Is there some kind of mechanism that we could put in place to help us access money after a natural disaster to deal with our most pressing needs? And sometimes after a natural disaster, we hear the term debt relief, countries seeking debt relief. And I want to ask a very simple question here. Is debt relief the same as debt forgiveness? And I know you all can't speak because it's a webinar, so I'd have to look in the chat. Okay, Carlton, you're saying no, it's not the same. They're not the same, they're two different things. Anyone wants to say why they're different? Debt relief may be a fast disbursing loan, even when you may not have normally had you may not have had the fiscal space to take on another loan. You may not have been able to access another loan, but in light of a natural disaster with need for quick resources, you would have been able to add another loan. So you may have gotten another multilateral loan, but this of course adds to your debt stock. In fact, and there are not many cases of debt forgiveness. So the idea was to create a mechanism which was unlike these other mechanisms to ensure that governments could have access at least within 2 weeks of a natural disaster happening in which they could get money. And this is what led to the creation of CRIF. So we are a facility designed to provide quick liquidity once a natural disaster happens and a country's policy is triggered. We are in that space of recovery, but before long-term reconstruction and redevelopment efforts take place. So the Caribbean heads of government at the time, they actually approached the World Bank for support to determine what sort of mechanism could be established that would enable them to provide this quick liquidity. And the answer was parametric insurance. This was the instrument. It's an ex-ante disaster risk financing instrument that could be employed within the Caribbean. And we're looking at all of these small islands coming together. So the idea was to form what is referred to as a risk pool, which became known as the Caribbean Catastrophe Risk Insurance Facility back in 2007 when we were first created. Today we're called CCRIF SPC because we have become a segregated portfolio company and we do not just operate in the Caribbean, hence taking out in a way Caribbean Catastrophe Risk Insurance Facility to just CCRIF SPC because we do also have a risk pool in Central America because we do provide the same service to Central American governments. So when we think about, we're talking about quick liquidity, we're talking a bit about CCRIF. You heard a video this morning that mentioned the two words, financial protection. So at CCRIF, when we talk about disaster risk management, and we refer to comprehensive disaster risk management, and indeed not just CCRIF, but this is actually part of the literature around disaster risk management, we're looking at about 5 distinct areas. So we're looking at things like risk identification, risk reduction, financial protection is actually considered a key part of comprehensive disaster risk management, preparedness, and post-disaster reconstruction. So within comprehensive disaster risk management, what we do at CCRIF is focused on financial protection. And financial protection includes both ex ante and ex post instruments or disaster risk financing instruments to help countries financially protect themselves from natural disasters. So we're going to discuss a little bit some of those instruments. Next slide. So when we talk about financial protection strategies and financial protection instruments, what we're really seeking to do is to link fiscal policy frameworks with disaster risk management and recognizing that natural disasters and financial crises are typically exogenous events, but they do have significant shocks across a country and across households. We know that when we do have a natural disaster, the economic damages from these natural disasters can jeopardize the health of our economies, sometimes at a level comparable or greater than financial crises. One of the things that financial crises really do not do is destroy human and physical capital stocks of countries, something that natural disasters do. So what we have found is that financial protection strategies and financially protecting economies against natural hazards and protecting economies before a natural hazard happens has become of interest to ministries of finance across our member countries because of the recognition that if a natural disaster does happen, the impacts on the economy and how that now impacts your social sectors such as health, such as education, etc. What we're also seeing is that we're seeing an increase in the frequency, intensity of climate-related hazards, right? And of course, this has again piqued the interest of governments to actually implement programs to help them to financially protect themselves. And many of these programs are referred to as disaster risk financing programs. Some of them are disaster risk financing and insurance programs. We're seeing across the Caribbean that while governments may already have in place disaster risk management policies, they're also putting in place disaster risk financing policies to be able to look at different types of disaster risk financing instruments. And we'd look at that in a little detail shortly. So disaster risk financing. What is disaster risk financing? It is a growing discipline that addresses the fiscal impacts and economic losses caused by natural hazards. So we're looking at a range of natural hazards. And the idea is, or the objective of disaster risk financing is to help us minimize the costs, to minimize the costs associated with these natural disasters and to reduce the need for post-disaster funding. We're also looking at, if we have these instruments, how, for example, do we limit, how do we limit the shocks that our economies face as a result of these natural disasters? So under disaster risk financing, we're looking at a range of strategies that can be employed by governments, but we're also looking at disaster risk finance. So we have disaster risk financing at the sovereign level, but we also have, and a lot of what you saw in the video earlier tended to focus on disaster risk financing at the micro level. So we could look, for example, at strategies that governments employ, instruments that governments can use, but we can also look at instruments for the private sector. We can also look at instruments for vulnerable populations as well. So in this course today, we'll be looking at two types of, we'll go through the different instruments that exist, but we will also be looking at two types of insurance instruments, ones at the sovereign level and ones at the micro level, or what we refer to as micro insurance. I don't know if there are any questions or comments in the chat.
No, not yet. Those were regarding the previous discussion about debt relief and so.
Right. Okay. So next.
There's a question in the chat from Isaac. Is this more at the government level? I'm not sure what he's referring to.
This course?
Is this more at the government level? Isaac, could you explain more about what you're asking?
Isaac, you can unmute. Yes, go ahead, Isaac.
Yes, good morning, folks. I was just asking in terms of that disaster risk financing, at that insurance level, is it more the government level or can private individuals participate in that financing?
Okay, so to answer your question quickly, currently, CRIF is more, we focus more on the sovereign level, which is governments. Well, right, so we have a number of instruments, parametric insurance instruments for government. We're also working with electric utilities. So we do have a parametric insurance product for electric utilities across the Caribbean. And that is mainly for transmission and distribution as opposed to generation, because and as we go into CRIF, you'll understand CRIF a little better, because what we do is that we insure the uninsurable. So we insure, in the case of electric utility companies, their transmission, their overhead transmission and distribution lines, for which for many years, for which there's really no, insurance companies are not willing to take on that risk, neither are the reinsurers. So for many years, they focused on self-insurance, which of course was not good enough, as we, for example, as became public by Anguilla following one of their 2017 Irma that impacted them, where, for example, they did have self-insurance, but then what struck them was that it wasn't enough to deal with recovery on one hand, and then secondly, they had nothing. So what they had saved up for several years got wiped out with one event. So we do provide coverage for electric utility companies. And currently we are about to launch this year a series of microinsurance products across the Caribbean for vulnerable groups. And we're linking those to social protection strategies. So we're looking at products a product referred to as the livelihood protection policy. And the livelihood protection policy will be applicable to farmers, fishers, day laborers, seasonal tourism workers, musicians, for example, who work, like, for example, in the tourism industry, who are impacted by climate-related events. We're looking at food vendors, street vendors, etc., MSMEs, micro and small enterprises. But we're also looking at innovative ways to get that type of insurance to groups as well through social protection policy and strategy as a means of expanding access to social protection after an event, both horizontally and vertically. So yes and no. For a microinsurance product, we'll be working with the Guardian Insurance Group across the Caribbean, because CRIF itself will not be selling that product. So yes, we will have a product for individuals. Okay, so if we go back to disaster risk financing over the last probably 15 years, and certainly with the with CRIF coming into the picture, and I think this is not just for the Caribbean, but globally, I think it has gained a lot more recognition. In fact, there are 3 other facilities around the world, 3 other risk pools, and all of which have actually been adopted and adapted around CRIF and how CRIF has worked. And the increased recognition and importance of disaster risk financing, and it certainly does not replace our efforts in risk reduction, for example, or climate change adaptation, or any of the work that, say, our national disaster organizations do. In fact, both come together to form, as I mentioned earlier, this comprehensive disaster risk management framework. So when we think about disaster risk financing, we need to also look at this sort of nexus between disaster risk financing and government policy practices. So there's 4 areas of policy practice that we need to look at. Disaster risk management, public financial management, financial sector development, and social protection. So this is the nexus between DRF and DRM. In terms of disaster risk management, we're looking at DRF within the context of how it may support disaster risk management in terms of how it contributes to building resilience. There is a link with public financial management, how we address the impact of natural disasters or these shocks on public finance. There is a link with financial sector development, because by having these new instruments in place, these new disaster risk financing instruments in place, it also helps to build a stronger financial sector, for example, for risk transfer, for insurance. And also there is a link in social protection, how disaster risk financing supports the poorest and most vulnerable groups in a population post-disaster. There are several reasons that governments are employing disaster risk financing instruments. One, because they're responsible for large portfolios of public infrastructure that are subject to risk, right? The disaster risk financing instrument almost always in the face of a catastrophe generates capital for emergency relief and assistance to households, businesses, communities. Many times, and as you go into the CRIF presentation, as we go into the aspect of the CRIF presentation, you will actually begin to see how, for example, payouts coming from the CRIF insurance has gone directly to support the most vulnerable in a population, or it has gone to deal with a piece of infrastructure that is critical, such as a water treatment plant, or the payout has gone into the reconstruction of schools, for example, that were significantly impacted by the natural disaster. Governments know that natural disasters do result in higher post-disaster resource deficits. So by employing, and in many cases, they tend to have to, without these instruments, or when these instruments did not exist, many governments would divert resources from existing programs and projects to deal with the impacts of the disaster at hand. And of course, the disruption of economies as a result of natural disasters has again prompted governments to think of other ways in which they can financially protect their economies. In many cases, for example, I think Hurricane Mitch that affected Central American countries back in 1998, when the dollars were done, the damage and loss assessments that were conducted by the World Bank, one of the things that was said is that this particular event would hold back development in Central America by about 20 years. So these are some of the reasons that governments are more and more interested in disaster risk financing tools and instruments. There are two types of instruments. There are ex-ante instruments and there are ex-post instruments. And in today's thinking, governments are looking more at ex-ante instruments. How can we plan for these disasters before they actually happen? How can we be more proactive in our planning? Ex-post instruments are instruments that governments have used in the past in the absence of ex-ante instruments. So they use things like budget reallocation, tax increases. There was a focus on donor assistance, debt relief. But what are we looking at now when we are focusing on these disaster instruments? Gina, you could actually, yeah, we can go to the next slide, please. And the next one. I actually want to get into the instruments. So when we talk about ex-ante policy instruments, we're looking at, for example, we're looking at insurance, we're looking at contingent credit facilities, we're looking at catastrophe bonds, right? So just want to get that across. As we know, several countries have been employing these instruments, and several countries individually across the world. So some of the pioneers, for example, has been like in Mexico, but we also have, for example, the CRIF model, and we have several other models across the world. Gina, if you can get me to the slide with the risk layering approach, I sort of want to stress on that.
Okay, it's there.
Thank you. So we're talking about these ex-ante instruments, and what I want to share with you is something that we refer to as a disaster risk financing layering approach. And we're talking about financial protection, and we're talking about governments having a financial protection strategy in place to protect them from these natural disasters that may take place. And what we're looking at is we're saying that there is no one instrument that can do everything. So what we have is a suite of disaster risk financing instruments. So for example, with CRIF, as you would learn, we focus on parametric insurance. And for other organizations like the IDB, for example, Inter-American Development Bank, they focus on contingent credit. So too does the World Bank. The World Bank has also been looking at catastrophe bonds. But how do all of these instruments fit into what is referred to as this risk layering approach? You would agree when we talk about, let's look at the example of hurricanes. We have category 1 to category 5. With earthquakes, we have this notion of a Richter scale. So already different hazards have different levels of intensity. So on the graph here, you're looking at severity of the impact. So obviously a category 1 hurricane, the impacts may be are very different from, say, a Cat 5 hurricane, right? So you have severity of impact. But there is also something referred to as sort of frequency of event, the probability of the event happening. And it is within this context that we look at some of the instruments and the risk layers. So what we're saying is that for different layers, as we move from low risk layers, such as things like local flooding or landslide, going all the way up to large earthquakes, tropical storms, and hurricanes, there are different instruments that we ought to have in place in a country. So we can have contingent budgets, we can have annual budget allocations for these smaller events. But then as we get into medium layer events, which may be things like, floods, more intense flooding, excess rainfall, we may want to look at contingent lines of credit. And as we get to the high risk layer in terms of catastrophes, we may want to look at our larger earthquakes that, 7.8 on a Richter scale, our big tropical storms and hurricanes. We may be looking at, we will be looking at the instruments we will employ there, maybe things like parametric insurance, catastrophe bonds, etc. And governments need to understand what their risks are, what are their risk reduction activities. So looking fully at your comprehensive disaster risk management and what you're doing, what would be the likely impact of a category 5 storm based on what you have in place? What does your risk profile look like now? And what sort of instruments you ought to adopt? All right. Next slide. So this is where we get into CRIF, and we start the discussion around CRIF. As I mentioned before, CRIF was prompted by Hurricane Ivan, and this request for assistance by the CARICOM heads of governments made to the World Bank to determine if there is any instrument out there that can be developed, that can be used to provide governments with access to quick liquidity following a catastrophe event. And this is what resulted in the birth of the CRIF, of the CRIF. And CRIF is the world's first multi-country, multi-peril risk pool based on parametric insurance. And it's really designed, it was originally designed to limit the financial impact of catastrophic hurricanes and earthquakes. Today, excuse me, we provide additional products beyond hurricanes and earthquakes. We provide products for excess rainfall. We provide products for the fisheries sector. We provide products for electric utilities. We're about to launch a product in collaboration with the IDB for the water utility companies. We have a product being developed for large-scale flooding events, etc. So what we really provide is short-term funding to support relief in the aftermath of a natural disaster. And at this point, we're going to share with you a short video that, will provide some additional information on CRIF. And then we'll get into some more details after that.
The work and impact of CRIF in the Caribbean and Central America. Following Hurricane Ivan in 2004 and the devastation across the Caribbean, CARICOM heads of government approached the World Bank for assistance to design and implement a cost-effective risk financing program for member governments that would provide them with access to quick liquidity following a natural disaster. This marked the beginning of what would become the Caribbean Catastrophe Risk Insurance Facility, CRIF, now CRIF SPC, the world's first and most successful multi-country, multi-peril risk pool based on parametric insurance. CRIF is a regional catastrophe fund for Caribbean and Central American governments to to limit the financial impact of devastating hurricanes, earthquakes, and excess rainfall events by providing quick financial liquidity when a policy is triggered. CRIF operates as a development insurance company as the products and services it provides are for the benefit of the facility's members. CRIF is also a captive insurance company because its parametric insurance products attract risks that are priced too high by the traditional markets. CRIF provides a bespoke insurance solution that enables it to provide unique and tailored insurance coverage that is not readily available in the commercial market. Today, CRIF offers 5 parametric insurance products for tropical cyclones based on wind and storm surge, earthquake based on ground shaking, excess rainfall based on volume of rainfall, the fisheries sector, and the electric utilities sector for transmission and distribution. But what is parametric insurance? Parametric insurance covers the probability of a predefined event happening, for example, a major hurricane or earthquake, instead of indemnifying actual loss incurred, and pays out according to a predefined scheme. Parametric insurance insures a policyholder against the occurrence of a specific event by paying a set amount based on the magnitude of the event, as opposed to the magnitude of the losses in a traditional indemnity policy. Parametric insurance makes a payment upon the occurrence of a triggering event and is detached from a specific underlying physical asset or piece of infrastructure. Parametric insurance makes payments based on the intensity of an event, for example, hurricane wind speed, earthquake intensity, volume of rainfall, and the amount of loss calculated in a pre-agreed catastrophe model caused by these events. Today, CRIF has 24 members, 8 more than the original 16 governments that joined in 2007, 19 governments from the Caribbean, 3 from Central America, and 2 Caribbean electric utility companies. CRIF has demonstrated that catastrophe risk insurance can effectively provide a level of financial protection for countries vulnerable to natural disasters. Since 2007, CRIF has made 58 payouts totaling $260 million to 16 member governments. Assessments have revealed that CRIF payouts have benefited over 3.5 million persons in the Caribbean and Central America. Most of CRIF payouts, more than 60%, has been used by governments to address immediate needs post-disaster, from providing food, water, and medicines to clearing roads. Also, payouts have been used for repairing critical infrastructure, such as schools, supporting the tourism sector post-disaster so that the country does not miss the upcoming tourist season, while hotels await payouts from their indemnity insurance, and supporting the agriculture sector, and so on. The importance of catastrophe risk insurance, especially in the face of a changing climate, cannot be overemphasized and must be viewed as an essential component within governments' fiscal policy frameworks and an important tool of changing climate adaptation as we strive to advance the sustainability agenda to achieve the SDGs.
Well, does anyone have any questions or comments? That was a short, quick video, which captures the essence of what CRIF is.
Anything? Anything you heard that you didn't know before, or you knew all of this before? Anybody?
There's a question from Jamal Gill. What are the interest rates like? What triggers payment?
Okay, we're going to go into those next, I think. I was okay, not a problem. We're going to go into some of those areas next. the turnaround time of 14 days is reasonable. So just to add to the video in terms of the context on CRIF, as we said before, we're the world's first and most successful multi-country, multi-peril risk pool based on parametric insurance. We are a development insurance company. So whilst we have to make profit to be sustainable, to be able to do payouts. At the same time, so in insurance companies, you refer to this as surpluses. So we do our investments, etc., and we do make surpluses, and but a lot of those surpluses go back into our members, go back into things like technical assistance, where we support for example, young persons with scholarships, internships. In fact, I think we're the leading organization providing scholarships for areas of disaster risk management, meteorology, etc. in the Caribbean. And we've provided millions of dollars in those since 2010, after we were formed. We use our profits to support, to reduce premiums for governments, etc. And for several other projects that we have around the Caribbean in things like nature-based solutions, etc. We support NGOs around the Caribbean to do their work as it relates to, reducing vulnerability, etc. We offer products, as you know, that are not readily available in traditional insurance markets. We provide quick liquidity, as we've been saying before. This slide here should actually have 58 payouts totaling US $260 million to 16 Caribbean governments. We have 19 Caribbean governments, 3 Central American governments, 2 electric utility companies, and we have several other countries in the Caribbean, in Central America, and public utility companies that I think this slide will change within the next month because of the increase in members that are coming on board as we speak. So I will ask my colleague Gina to take over after this slide. So as we said before, we offer 5 products for now, and we'll speak a little bit about our microinsurance product that we are developing in collaboration with the Munich Climate Insurance Initiative out of Germany. We're working with ILO Impact Insurance, and our insurance distributor will be the Guardian Insurance Group, which has quite a large footprint as well across the Caribbean. So our parametric insurance policies, when we talk about earthquake, our earthquake policy is based on losses due to ground shaking, tropical cyclone, losses due to wind and storm surge, excess rainfall due to the amount of rainfall. Coast is based on losses in the fishery sector due to rain, waves, wind and storm surge, and electric utilities based on losses for electrical transmission and distribution lines due to wind. Our coast product for the fishery sector, in fact, is the first of its kind in the world for the fishery sector to support for a particularly vulnerable group, fisher folk. It's one of our products that is very much aligned to gender equality, as it recognizes the role that women play in the fishery sector. Whilst it's a sovereign level product purchased by government, the actual beneficiary is fisher folk, and fisher folk not just meaning fishermen or large boat owners, but also the fishermen who work on the boats, the boat boys who clean the boats, the market vendors, many of whom are women, the cooperatives, many of which are run by women. So a very interesting product, and we'll share a little more with you later on. So as we said before, and we have been saying, when we're talking about disaster risk financing and we're talking about post-disaster needs, this is another way to look at that graph that we showed before, where we showed CRIF occupying that space of quick liquidity. What we're saying is that governments usually have immediate relief. We usually see countries other governments supporting countries with relief supplies, whether it's blankets, whether it's food, whether it's bottled water. The need for quick liquidity is where CRIF comes in to begin that recovery effort. Long-term, so you look at this within the dimension of the disaster happening and over time. What do you need at different points in time? CRIF payouts, as we said before, 260 million made to 16 member governments within 14 days of an event. And what have these payouts been used for? Because many times people say, okay, so countries get payouts, but CRIF payouts don't go to people. CRIF payouts go to the government. But when a payout goes to the government, it also goes to the people, right? So what we have seen is that 63% of our payouts have gone to support immediate post-event needs. And what does that mean? Governments I'd like to pull back a little bit and say that whilst we do not say to our governments how they should spend the payout, we do require reports on that payout, and we do seek to ensure that those payouts conform to ESG factors, environment, social, and governance factors, so that you're not using a payout that will impact, for example, indigenous peoples in your country, or you're not going to use a payout that would destroy an aspect of the natural environment. So we do have a number of ESG factors that they have to align the use of payouts with. 63% of payouts go to immediate post-disaster needs. And this may include things like food, water. It may include, for example, building materials. It has included in the past medication. It has included some infrastructural activities, for example, just immediate infrastructural activities. So we do have an example for Hurricane Thomas in St. Lucia in 2010, where the majority of the payout went to fix its main water treatment plant, which went down following Thomas. We do have some immediate road construction, bridge construction that may take place. Some percentage has gone into long-term infrastructure work. So following the Hurricane Irma in the impacts on TCI in 2017, much of their payout went into reconstruction of their schools. Most of their schools were destroyed. For us, that's an example, I mean, where, for example, they built back better to prevent, or to ensure that they have less damage or no damage following another tropical cyclone event. Some have gone into risk mitigation activities. We have, for example, support to economic sectors such as agriculture, tourism, etc. And in the video, you would have heard that countries have used their payout. And this, for example, is the case of Anguilla, where they used a payout, I believe it was under Irma, to support their tourism sector, because what they did not want was for their hotels to have to wait on their indemnity insurance and for the country to lose the tourism season that was coming up in 2017. So they used that payout to fix hotels so that tour operators, which don't really reside here in the Caribbean, but in the US, would not have had to change destinations for tourists and move tourists away from Anguilla into another Caribbean country, because that's how it works. You have a natural disaster, tourists have bought their tickets and their vacations with their tour operators. A natural, a hurricane strikes, there is significant damage. Your tour operator just calls their clients and says, okay, we're moving you from Anguilla to BVI, or we're moving you to Jamaica, we're moving you to Barbados, all right? Our single largest payout to date has been to Haiti. Following the August 14, 2021 earthquake, they received a payout of about 40 million. Member receiving the largest value in payouts have been Haiti for a number of events. Members receiving the largest number of payouts, so the most payouts has actually been, in fact, an update to this slide will be the member receiving the largest number of payouts would actually be Trinidad and Tobago, which would be 7, followed by Nicaragua and Barbados, which have both gotten 6 payouts each. Approximately 3.5 million persons have benefited from CRIF payouts since 2007. Gina?
There's a comment in the chat from Juliet. This information is so enlightening, and I trust that all who need to hear and can take the necessary action to prepare for natural disasters will hear. I like the idea of the CARICOM region uniting to help each other because we do need each other. I have to leave now, but I pray all effort in planning, preparation, and dissemination of these plans bear much fruit for the future. So thanks, Juliet, if you're still here.
Okay, Gina, you can go on.
Okay, so we mentioned that parametric insurance is different from indemnity insurance in that it's not, payments are not made based on loss adjusters coming out and inspecting, you know, what has been damaged or what has been stolen or anything like that. So parametric insurance policies make payments based on the occurrence of a predefined level of impact of the actual hazard and the impact. And the CRIF model for parametric insurance is based on a loss modeling approach, where using the level of hazard and the infrastructure on the ground, it calculates a modeled loss for that particular event. And so a country's policy is triggered if the modeled loss exceeds the trigger event loss in the policy. We call it the attachment point in CRIF. You can also think of it kind of like a deductible. So the policy is triggered if the event loss is greater than that value. So for CRIF, for tropical cyclone policies, the model losses are estimated or calculated based on wind speed and storm surge. Liz mentioned this a little while ago. And for earthquakes, the level of ground shaking, and for excess rainfall policies, the volume of rainfall. So you saw that back in 2007 when CRIF was established, it only had policies for tropical cyclones and earthquakes. And as you can see from this model or this description, the tropical cyclone policy does not include impacts from excess rainfall. And so in 2013, CRIF was able to offer a product specifically for excess rainfall. And that covers rainfall that can occur during a hurricane or tropical cyclone or any other time of year. So the hazard levels are applied to the predefined government exposure, meaning the assets on the ground, to produce a loss estimate. And if the policy is triggered, the payout amounts increase with the level of modeled loss up to the coverage limit, which is set in the policy, which is set by the country. They decide the level of coverage. And I'll just go into the next slide, which will demonstrate these a little bit. So this is how CRIF policy is constructed. And the policyholder, whether there's the government or the electric utility company, decides these 3 basic elements. So the first one is the attachment point, which is the model loss value, which leads to a payment on the policy. So again, you can think of it kind of like a deductible. At the other end, we have the exhaustion point, which is the model loss level, which gives you the maximum payout under the policy. So this is the point. So if the losses are above that level, you'd get the maximum payout of the policy. And I'll use some examples in a second. The ceding percentage is that percentage or that fraction of the coverage that the country is paying for, that the country is transferring to CRIF, that the country is expecting CRIF to take care of. So I'll just use an example. Suppose your country's attachment point is $100,000. That means that if a certain event, let's say a tropical cyclone, causes model losses greater than $100,000, your policy would be triggered. If the exhaustion point, for example, is $1 million, if the model losses of a particular event reach $1 million, you would get the maximum payout under that policy. If the losses due to a particular event are say 1.5 million, you would still be limited to the coverage limit or the maximum payouts. Anything above the exhaustion point, you would get the maximum payment under the policy. And the value of the payout is equal to the exhaustion point minus the attachment point times the seeding percentage. So basically, it's that blue area that you're looking at, where your country is purchasing coverage from CRIF for that level of risk. So using the example I provided, if you had $1 million exhaustion and 100,000 attachment, and let's use 50% as the seeding percentage, which is kind of what this diagram shows, your maximum payout would be 1 million minus 100,000, which is 900,000 times 50%, $450,000 would be your maximum payment under that policy. So if your model losses were somewhere in between 100,000 and $1 million, the payout would be within that range, between less than 450,000. I see a question. Okay, somebody leaving. So is that clear? I don't want to, this course is not all about CRIF, but basically this is how the policies work. The countries select these parameters, and they select those parameters based on the budget that they have, based on the risk, their country risk profile. They may select to have a higher coverage limit for their earthquake policy, for example, compared to their tropical cyclone policy, or vice versa. Similarly, they may want to have more in their excess rainfall policy. Some CRIF members most CRIF members have all three policies, but not all. Of course, countries that are not particularly vulnerable to earthquakes typically don't have earthquake policies, such as the Bahamas. But most who have tropical cyclone also have excess rainfall as well. And so very often, if you see in the news, whenever a CRIF makes a payout after a particular event, we do publicize that, to say, Hurricane Erica caused, we gave a payment to Dominica, for example, after Tropical Storm Erica of whatever amount, 2.5 million or whatever it was. And that payout is based on the actual policy that the government purchased. And so if their attachment point is relatively high, then it's possible that their policy would not trigger after a particular event. Because remember that in the risk layering diagram that Elizabeth showed, CRIF insurance is really for the high intensity events, catastrophic hurricanes, which do not happen very often. Countries need to have their own maybe national disaster risk financing or arrangements or disaster funds to handle those annual floods and, smaller earthquakes, etc. So any questions about this? Are any of you aware of payouts that CRIF has made to your own country or any other country in the Caribbean for that matter? Anybody? Or you can just raise your hands if you don't want to chat. Yes, Trinidad and Tobago. Isaac, which countries are you aware that have received payouts? Grenada. Okay, well, as Liz said, CRIF over the years has made 58 payouts to 16 member governments. So starting from the year one, 2007 is when CRIF made its first payments, and up through last year. We haven't made any this year so far, but of course we're just getting into the hurricane season now. And one of the reasons that we share information when payouts are made is so that the general public knows that these funds have been provided to the governments and that there are those resources available for the immediate recovery activities. So CRIF is continually improving its products. As we said, it started with tropical cyclone and earthquake, expanded to excess rainfall. Liz mentioned that we're looking at a more extensive runoff model, which is looking at the impacts of more like, overland flooding. So looking not just at the direct impacts of rainfall directly, but of the movement of water across the land and overflow of rivers, etc. And these, of course, are more important for the larger countries, and two of which, actually, Guyana and Suriname, we're actively hoping to engage as soon as that model is completed. We are also looking at developing a product for drought. Initially agricultural drought and maybe hydrological drought as well, which would affect countries' water supplies and so on. We have a product for electricity and electric utilities and fisheries, and Liz mentioned that we're also working with IDB to provide a product for water utilities. And LPP is the livelihood protection policy, which is a micro-insurance product. So not sold to the governments, but sold to individuals or small organizations. And we're also looking at developing a multi-hazard agriculture product based not only on drought, but also on on wind and wind and excess rainfall as well. So we are continuously trying to meet the needs of CRIF's members and potential members in order to provide financial protection against natural hazards. So as Elizabeth mentioned before, the coast product for fisheries, while it is a sovereign product, it kind of acts like microinsurance, or one component of it, in that there is one component that acts kind of like business interruption insurance, so that when fisherfolk are prevented from going out to sea due to high waves or rainfall, this insurance could potentially provide assistance. And also, as she mentioned, CRIF has worked with the Munich Climate Insurance Initiative on the livelihood protection policy. So these are some examples of work which directly affect or benefit individuals. And so microinsurance is growing throughout the world, and some of it is not related to natural hazard risk, but there are a variety of microinsurance schemes throughout different areas of the world. And basically, it's meant to provide some stability to vulnerable low-income individuals after a disaster. As many of you could appreciate, it's very difficult for some of these persons to access traditional financing through banks and credit unions. So microinsurance is a way to help these persons obtain some kind of financial protection. And very often, when they do have microinsurance policies, those policies themselves act as a kind of collateral so that they can then approach a bank and get a standard loan. So further increasing their access to financial protection. And of course, if a small farmer, for example, has a livelihood protection policy that's triggered after a storm affects his farm, then he has those resources to start making immediate repairs and clearing the fields and so on without having to wait for government to provide assistance. So again, we're going to bring Cindy back one last time before we leave. And this is a piece that she did for a microinsurance conference in Jamaica last year. And so I invite you to listen to her words once again. And all of these videos that we're showing are available on CCRIF's YouTube channel. And the link is there in the presentation, which I know will be shared with you after this meeting.
I have wondered how many times poets will have to write the same poems but with different lyrics. How many times small island developing states will broach the same topics in discussions about the global climate crisis. And it's true that it took me a while to see that though we continue to make the same pleas, that though we strive to create some ease, it isn't easy. And the reason is that in reality, one size does not fit all. One way of thinking cannot act as a catch-all. Yes, the impacts of climate change are global. But what do we lose when we fail to recall that each part of this planet is affected at a different level? Because for some people, it isn't as simple as rising temperatures or longer summers or colder winters. For some people, the effects cut so much deeper, and developing states always seem to be the biggest losers. In 2017, the journey of Hurricane Maria lay waste to Dominica, destroyed architecture and infrastructure, and devastated the entire island's economy 200 times over. Yet in the aftermath of a storm in Germany, the time it takes both countries to recover is like comparing an ocean to a drop of water. So if the picture we see painted is that developing states are disproportionately more prone to disasters, and it doesn't make sense to search for solutions by dipping the brush into the same colors. The canvas is much more complex than the rest of the world gives it credit for. Even within the palettes of each place, there are several shades to account for. Society isn't monotone, isn't a monolith. And along the spectrum of hues of experience, exposure to risk exists with much variance. And with reduced ability to protect yourself, you become victims of a circumstance that you yourself did not create, like the fishermen, whose occupation is already dangerous enough before the heavy rains and high winds come, confined to their homes by weather that threatens their lives and their livelihoods at once, like the farmers, who could plow and tend their crops year-round only to be found without by flood or drought, like the poor, for whom the cyclones will send their already vicious cycle of life into a slippery slope spiral that traps them further beneath the poverty line. They all have different needs. The nuance in their experience means that their vulnerability vastly varies, means that they don't all fit perfectly into the molds we have seen. We are staring down the difference between equality and equity. Because to face this, it's not about treating everyone identically, but about tuning into what each group needs specifically. Inclusivity is about understanding the idiosyncrasies, is about sensitivity to the specific conditions that create each vulnerability. We must become the agents of change capable of renewing a sense of agency, must make the social protection systems as diverse and flexible as the societies they are made to reflect. The instruments should get their notes directly from the communities that their tunes serve. This is how we ensure an ability to endure. Where disasters close doors, we must be there to reassure by opening windows of opportunity. Policies where governments can support access to insurance facilities with adaptivity built into their fabric, so they can service societies as needed, whether for earthquake, flooding, hurricane, cyclone, coastal protection, or excessive rain, whatever the incident. We must be the ones to move our kin from vulnerability to resilience. We cannot underestimate the importance of tailor-made insurance to vesting some power back in the people. The question that becomes meaningful is, what else can we do to build forward stronger and equal.
Any comments from anyone? What did you all think of that one? The idea of focusing on the individual, very sobering, says Isaac, and enabling individuals to benefit from, you know, all the resources that are being poured out there in financial protection. So this, thanks, Rosemary. So the livelihood protection policy, just to give you a little bit more about that. First of all, it's being implemented in 5 pilot countries. It started in Grenada, St. Lucia, and Jamaica in 2013. And so some of you may have heard of it before, but this new pilot phase has expanded to Belize and Trinidad and Tobago. And this product is for individuals, whether farmers, small farmers, day laborers, your seasonal tourism workers, food vendors, you know, any person. I mean, the policy does not, policy can be purchased by any person. There's no strict limit or definition of who can purchase the policies, but these are the expected target groups. And basically, it's designed to help protect the livelihoods of these persons whose livelihoods are affected by extreme weather events, and in this case, high winds or heavy rainfall. And in addition to providing it to individuals, we're also looking at maybe providing group policies to, you know, fishers associations, farmers associations, and other cooperatives who might be able to purchase these policies on behalf of their members or other groups. And basically this livelihood protection policy is designed to reduce nonprofits. Yes, I'm not sure how to pronounce your name, Shoban, is that correct? So initially they're being offered to individuals, but we are looking to see how organizations, small organizations, will be able to, Siobhan, thank you, will be able to have access to these kinds of policies.
If I can add something, Gina, and what we're trying to do as well is to see how government social protection ministries would want to utilize policies like these within the context of their social protection policy. In other words, would a government be interested in purchasing, say, 5,000 policies? And should there be a rainfall, their social protection ministry, should there be a rainfall event that causes significant damage, let's say along a coastline, or a rainfall event that has impacted several communities? If the policy is triggered, then the government, instead of utilizing resources or from, say, other programs and projects, they can utilize their insurance payout to help those most in need. So that's one area. We're also looking, for example, at large private sector companies doing the same. So if we think of companies, let's say in Trinidad, we have these big companies like Nestle, right? Who relies on small farmers for like their milk products, for example. When there is a rain event and fields and so on are flooded, or, you know, cattle die, etc., organizations such as Nestle are impacted. And the idea would be to work with some of these entities to see if they can not purchase on behalf of the farmer per se, but also have some arrangement with the farmer where they purchase a portion of the policy and the farmer a portion of the policy. In the case of, I think in Jamaica, there are examples of persons who, for example, street vendors who sell products for big companies. So like there are street vendors who would sell a product for the banana company. So they're selling the banana product of, I think, Jamaica producers. But when there is an event that destroys those banana fields, there are no, I mean, those guys or women, you don't see them on the roadside anymore selling bananas. So therefore, their livelihood becomes impacted for like a period of 6 to 8 months or 8 months that it takes for the bananas to grow back. So looking at some other innovative mechanisms to get these microinsurance products to scale them up very early in the process.
Thanks, Liz. Liz mentioned earlier how special the Coast product was. So just to show you a little bit more about that. So it is a sovereign product. It is purchased by the national government. However, when the government receives a payout, the payout is automatically disseminated to persons. Yes, Siobhan, that's the idea, trying to create equity required to, quote, weather the disaster event. No pun intended, I'm sure. Okay, so back to Coast. So there is, when a country signs on to Coast, they have to have in place a database or an inventory of persons within the fisheries sector. So again, not just the fishers who are going out to sea, but persons throughout the fisheries industry, the boat boys, the fish vendors, market vendors, etc. And when the country receives a payout under the Coast policy, the persons in that inventory, in that database, automatically receive a portion of that payout. The payout is distributed evenly across all persons in that database. And so Coast is a little bit more than just providing insurance. It's really working with the governments to improve their fisheries sector and to encourage a sustainable fisheries sector. And it really promotes the culture of building back better. So the Coast policy itself, it does provide this business interruption insurance, but also the tropical cyclone component of it is based on, or is triggered based on, impacts to fisheries infrastructure. So it provides a mechanism where fishers and other persons can use those resources to repair their boats, get new fishing gear, etc. And currently it's in place in Grenada and St. Lucia. And CRIF has every attention and is working throughout the region and doing assessments of the fisheries sector in different countries in the region to enable them to come on board later this year. As Liz mentioned earlier, it's the first product specifically designed for persons in the fisheries sector. And we're looking to see if this could be a model for other sectors as well. But right now, the Coast insurance is available for CRIF member countries in the Caribbean. And as Liz mentioned, it does include an element of gender equity in that it includes, or it focuses on, or it ensures that it includes women. Very often women are the leaders in the fish markets. The fish vendors are led very often women. and and the fish processors, the persons in the processing plant as part of the fisheries industry, very often those are women. And so the coast policy definitely ensures that there is equity in amongst the beneficiaries for this product. And the product CRIF is working in collaboration with the Caribbean Regional Fisheries Mechanism, because they're integrally involved in helping to perform or conduct some of those fisheries assessments. So the last few slides, and we're done. I know we're getting to the point we're supposed to be stopping for a Q&A session, so I hope you have a lot of questions lined up and saved up. This is just pointing out that disaster risk financing has a critical role to play within disaster risk management and climate change adaptation. As we know, the prevalence or the frequency and intensity of these climate-related hazard events are increasing due to climate change. And according to an economics of climate adaptation study undertaken in 2012 by CRIF and other partners, they did some assessment of the impacts of climate change on different economic sectors within those countries and the infrastructure within those countries. And it determined that damages from wind and storm surge and inland flooding due to increased climate change due to climate change could reach 1 to 9% of regional GDP by 2030, and 2030 is not far away. So countries are really taking on board the idea that they must create disaster risk financing strategies and policies, not just part of their disaster risk management policies, but as part of their climate adaptation policies as well. And as we've been talking about, we talked about insurance as a risk transfer mechanism, and insurance is a demonstrated tool or recognized tool that is helping countries with their climate adaptation strategies. So these are just some gaps and challenges to leave you thinking. As we know, governments are constrained, especially coming out of COVID, constrained in their fiscal space. And we would like to proudly say that even in the midst of the COVID pandemic and recovery, countries still, or CRIF members still recognize the importance of investing in their disaster risk financing options through CRIF, and they all renewed their CRIF policies and in some cases increased their coverage. So I think we're at a point in the region where countries appreciate the importance not only of CRIF, but of developing a suite of disaster risk financing instruments, and are increasingly interested in the lower level or the micro insurance level, where citizens within their country can make investments of their own to protect themselves against natural hazards. So despite the inadequate fiscal space, despite the lower per capita incomes, persons are realizing that the investment in these kinds of instruments are important and are willing to set aside resources to do that. One critical thing is enabling persons to understand what parametric insurance is and how they can benefit from it. As you would imagine, very many people have a negative impression about insurance in general. Many persons, we skipped over this a little bit earlier, but the insurance penetration rate in the Caribbean is extremely low, like less than 10% of persons have insurance against natural hazards. and so on. And so part of the challenge to increasing uptake of parametric insurance and similar products is an understanding by the population of how they work and how they can benefit. And knowing that it's a very transparent process. When they purchase a policy, it's upfront what level of hazard, speaking of including the microinsurance, what level of hazard impact would create what level of payout. And so they can do some kind of planning for that. Private sector has a definite role to play, especially in microinsurance. And so we're actively engaging with them as well. And I think there was a question about nonprofits, Siobhan, and those are increasingly becoming target groups. In rolling out the LPP, the focus is on addressing local groups, farmers, potential customers, such as the fish vendors and food vendors and so on. So definitely expanding beyond the target group of the typical banks and insurance companies. So it's seen as a holistic attempt to involve larger segments or more segments of the population. And I'm going to stop there. As always, we are always available for any questions. Send us an email, visit our website. And at this point, I'd like to hear any comments or questions based on what we covered this morning.
So folks, if you have any additional questions or comments, we invite you to place it in the chat, or you can quickly raise your hand. We don't have a lot of time, but thank you so much. I mean, you have really been posing your question and making your comments all along. I see Isaac is saying very informative presentation. Thank you so much, Isaac. Thank you so much. And Gina and Liz, while we're here waiting on any additional questions or comments. Oh, here comes one. So Marie Bez asks, should parametric insurance be a condition of loans for medium to large enterprises?
Okay, back to Mariba. That is definitely a consideration. What challenge, of course, is to ensure that parametric insurance products are available, because it would not be fair, to make that a requirement if there aren't sufficient instruments available. So that's the first part that has to be put in place. We've floated ideas in a few countries, and this fits in with Isaac's next question about how can government be more involved. For example, when part of the registration process for fishers, could be to obtain parametric insurance as part of the condition of being allowed to have a license to be a fisher. But then on the other hand, I mean, that costs money. So on the other hand, the government could also provide some assistance for fishers to purchase that kind of parametric insurance, or to do things like reducing the taxes or reducing the taxes on that kind of insurance, and thereby reducing the cost of that insurance for individuals.
Yeah, and even Gina, as I'm reflecting on Isaac's question, I think it's also about the kind of advocacy role we can have, formal or informally. I'm looking at the list of participants, and I know the majority of us, if not all of us, we work in the public service, either nationally or regionally. We have to recognize that we have access to certain information that may not be as accessible to other vulnerable groups, like fisher folk, just to give an example. And so what can we do? We live in small societies, therefore, vulnerable groups are not far off from us. How can we use our influence to start that discussion to help vulnerable groups to mobilize, to direct them in the direction of, the necessary bodies, etc., to try to advocate to get some of these kinds of protection, social protection and financial protection measures put in place for their particular sector, even as public servants, if we have those kinds of direct responsibilities, how do we make sure these things are integrated into our work or policy work? And those are some of the ways we can spread. I think it's so easy to say somebody else needs to do something. What is CCRIF SPC doing? What is CARICAD doing? And not to say we shouldn't be doing something, but what can we do? What can we do? You'll be surprised how much we can bring some value to the table.
Yes, thank you, Lois.
Any other questions? And I was going to say earlier, to Mariba say we need more public awareness campaigns. Exactly. But with the advent of social media, any one of us can have a platform to spread the word. Not to say we don't need something more formalized. We need much more formalized interventions, but we can use the influence that we do have. And you'll be surprised how it makes a difference. Gina, I don't know if you have something that you can share. CRIF has a number of scholarships and these applications are open now. And so you might want to take a minute to share on that. So do you want me to stop my screen so you can share that quickly with the participants here, Gina?
Sure.
Awesome.
Thank you. While I'm finding that, thanks, Lloyd. Thanks for that. CRIF has a technical assistance program, and through that program, we offer internships and scholarships. And the application window is actually open right now. And excuse me. We offer scholarships for postgraduate study in the Caribbean at the University of the West Indies and a number of other regional universities, such as University of Trinidad and Tobago, University of Guyana, Northern Caribbean University in Jamaica, University of Technology, and so on. And these would be for scholarships to pursue degrees in areas related in some way to disaster risk management. Okay, so this is the scholarship program, and so it provides scholarships up to $11,000 for each scholarship. And we invite you, we'll share these flyers with you, Loy, and we'll share so that you can share with the participants to publicize this, if that's okay.
Yes, definitely.
And so we encourage you to do that. We also have a scholarship program for undergrad scholarships. And this is tenable at the University of the West Indies. And it's for the second and third year. In select programs at all three of the residential campuses of the University of the West Indies. And again, this application window is open right now. So it gives you the list of particular programs that we do that. So the student has to have completed their first year at the university first, and then they will be able to apply for their second and third years. And then we have a program for interns. CRIF offers internships to young university graduates to work in either national or regional organizations in areas related to, again, areas related to disaster risk management in some way or form. And these are some example organizations that have done it in the past. For example, the CARICAD itself, you've had a couple of interns with us, and OECS and so on. So those of you, again, we encourage you to encourage young people who you might be in contact with to apply for this program. And actually, we're having an internship forum tomorrow, 10 o'clock Eastern Caribbean time, for persons that are interested, in the program and learning about what the program is about and other TA program opportunities as well. So that forum is tomorrow at 10 o'clock. We'll send a link to that as well in the follow-up to this webinar, Loy. And throughout the year, we accept applications for a small grants program that CRIF operates. And this is where NGOs, community-based organizations, academic institutions can apply for small grants between $5,000 and $25,000 US to implement projects, disaster risk reduction projects in their communities. And we accept applications for that all year round. Thanks, Jamala. Jamala put the registration link for the internship forum in the chat. If anyone is interested, please join us tomorrow to learn more about the program. And Pat, you can pass that link along also.
All right, thank you so much. As we just wrap up with announcements. So next week, next week, Tuesday, is the final in our webinar series. And we'll be talking about redesigning government for effective climate governance. And we'll be looking at the work that CARICAD has done in the OD area in terms of helping to facilitate the creation of a climate resilient government for the Commonwealth of Dominica. So you definitely don't want to miss that. In terms of other announcements, we're inviting you to save the date. CARICAD will be hosting its virtual symposium on July 11, and the theme is Innovation, Digital Government, and Changing Mindsets for Public Sector Transformation. So as time goes along, you will hear more about that, all right? And so we continue to put in the chat links to various of the CRIF Small Grants Program. There's a link for the internship forum that's going to be held tomorrow. And last but not least, in terms of announcements, the call for applications are now out and open for CARICAD's mid-level leadership development program. So, this is one of those underpinning themes of this webinar, for climate governance to really come to fruition, it all has to be led, and so this is really one of our flagship programs, the mid-level leadership development program. In fact, on this webinar, I see a few of our graduates from that program. So if you are interested, please do contact us. You can find out more information on our website, and there's our website there, or email us at info@caricad.net. And finally, we always believe here that feedback is a gift. And so I want to invite you to just complete our evaluation poll. It is there, posted in the chat just now. It's very short, just want to get your feedback on the session. We are already seeing the comments that you have made so far, which have been quite favorable, and thank you for that. So complete your feedback poll. And once you've finished that, then we're going to be closing out this webinar, the third in our climate governance webinar series. And we look forward to seeing you at the final webinar next Tuesday. So all the very best to everyone. Thank you for attending, registering, and please do invite others to register. Registration for the climate governance webinar is still very much open. Have a good rest of the week.